This month, the Chicago housing market is just about the same as the previous months. It's marked by low inventory, rising prices because demand continues, and we're seeing all-time record lows. Let me take you through it. Let's start first with houses like we always do in the lakefront communities, single-family homes. Last month, and this is the month of June, 138 homes closed. You can see that that went up. June is a big closing month, particularly given our situation with low inventory. 87 homes went under contract. That was down 17% versus the previous year. And 87 homes are currently for sale. Think about that a minute. 87 for sale, 87 went under contract. So we definitely are going, look at the chart. It's going down in number of homes under contract. In terms of homes for sale, 87 is the absolute lowest that we have seen in years and years and years. That equates to only 1.1 months worth of supply. Remember, 4.5 to 5.5 is a steady market, balanced, totally a seller's market at this point. 1.6 is the median sales price for a single family home. That's not Lincoln Park anymore, folks. That's everywhere. It includes from the South Loop up to Rogers Park, including West, which means Westtown, Logan, Roscoe Village, and Lincoln Square. So 1.6 million. That's up 52% since January of 2021. Year to date, sales are down versus previous year. 487 is down 5.3%. All right, let's look at attached. Last month, 1,744 properties closed, and that's, of course, co-ops, condos, townhomes, down 1.2% from the previous month. 1,158 went under contract. That was pretty much flat from the month before, and you can see the seasonal ups and downs. So typically for attached, March, April are the highest months for under contract, and we tend to go down for the next few months. So this is a very typical cycle, yes, but for sale, only 1,408. So again, let's compare them. 1,408 for sale versus only 1,158 under contract. So almost everything that's hitting the market is going under contract. That equates to only a 1.7 month supply. Condos are selling. Median sales price, 482,375. How's that for a round number? That's up 4.9%. And again, that's up 16% since January of 2021. Attached properties are down 3.5% versus previous year. That's year to date. As of last week, Freddie Mac interest rates were 6.4%. And you can see they're holding pretty steady here. We're not seeing a big up and down on interest rates. So if interest rates are the reason that you're holding off, don't let that be the case. Let me make this a little bit bigger. This shows the average rent prices for the various areas throughout the United States. Last month, we were at like number 10. This month, we're at 12. We went down 2 slots. This is not Lakefront communities any longer, folks. This is all of Chicago. A 1-bedroom, $2,200 per month, and a 2-bedroom, $2,600 per month is the average price. Okay, and then if you look at this, you'll see that the rent trends are going up significantly. The graph shows rent prices going up, 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 up. If you look at the metropolitan areas in June 26 versus June 25, you will see that Chicago, despite the fact that we went down a little bit in price, we still are one of the biggest risers in terms of rents. Not surprisingly, San Francisco's up there at 4,060, which is basically Manhattan prices too. But 2,200 puts us right up there with the biggest risers. So at the end of the day, folks, what does that say? It says the market is hot. It continues to be hot. If you are thinking of buying or selling, you really need some advice as to how to navigate the marketplace. You want to take advantage of the situation you're in, beware the pitfalls, and it certainly can be a really good time to be in the real estate market. So if you have any questions, please reach out. I'm in Rossley with Baird Warner, and let's connect.
Okay, let's go.